I hope you guys can see my screen. And I want to welcome everyone on the second day of the new month of 2022. Now, we hope that your January was fruitful, and always look forward for the best in life. So once again, we want to welcome you to our session. I think this is our third session of the year, 2022. So yeah, without wasting time, we are going to analyze Euro USDCAD. So if you are to remember, if you are to remember last time, we spoke about the dollar, what we're expecting with the dollar. So before we go there, we're just gonna talk about USDCAD. So what you do, as usual, we go to the monthly time frame, and then we check the trend. So we check or observe, okay, what was happening with the market. So we can see that from that point to down there, this was a channel for a downtrend. Okay. And then there was a breakout, this breakout here. And then we got a retest here. So we got our lowest point, this one. Yeah. Right, that is our lowest point, right? And then we've got our highest point on monthly, which is this one. So then it becomes a zone. Same applies here, it becomes a zone on monthly, right? Okay. So from there, now we check, okay, after this breakout, what happened next? Then we can see that before we do that, we can see the market, it retested this zone, right? So we check that retest, like what was happening. Okay, as you can see, okay. So now with our retest, it surpassed the zone, the hand zone a bit, actually it's in the zone. So this was a deeper correction in a way. So in our consideration, we consider it as a wave 2, but in this scenario, it's a deep one because you can see it came almost, because remember we say from the stop point, we take about 23 pips to 25, right? Right. So from there, it was almost what, 100%. But remember now, this is in two ways. If you have to check it on weekly, you can see that this was not what, this was not a spike, right? And the market came in just to, it was a deep correction. So hence I say to you, if you go back to monthly, the reason why I'm saying this is wave 2, it's because of this. But if you were someone, you were gonna consider this like as a what? Is a week, and then you consider that the price closed inside here, of which it's going to be the same thing, but a different one perspective. So in that case, we now consider this zone as this correction is our extended wave 2. So as you can see, after this wave 5, we've got this correction for what? For our wave 2. So in this correction, we can go to weekly. Okay. This is the correction which happened here. So what happened here is we've got our wave 1, and all this movement was our wave 2, right? And then after wave 2, we so this 2, and then in that case we got our 3, which is extended 4, and then it ended with 5. The 5 was a truncation above there. So now we got a new high that we are also considering, right? This one. Okay, so now we want to talk about this type of correction. We can see that is 1, 2, 3 to give us your A. So this we consider it as our 1. So it's our 1. Okay, so and then from there, we consider this one as our W, it's a zigzag. And then we consider this one is our X. So this is our A, B, C to give us this W, and then 1, 2, 3 to give us this X. And then we consider this as our Y. Also with our Y, it happens that 1, 2, 3, 4, 5 with the truncation. Okay. So we get our WXY from there, it gives us our 2. Okay. So on the other hand, if you were to trade these structures, you're going to have this first structure, the inside one. You can see it. And then you consider this portal. So in this structure now you get your leg, and then you get this 1, 2, 3, 4. Sorry, you get this 1, 2, 3 for this one, right? But I'm not going to label these ones because there's no need for us to do that. And then also from there, you consider the structure, which is a breakout and a retest there. Okay. So if you've got any other questions, please feel free to ask. So we just consider it with this lowest leg right there. Okay. So did you see how we got these structures? So I had to calm down so that you guys, you can see what are we talking about here. Okay, so but anyway, so now we've got 1, 2, and then we are projecting for 3. So we know that with our 3, what are we expecting? We're expecting the market in this scenario. This was very deep. So for it to hit TP1, it's correct. So now we know our 3 ended here because the market was very deep. If it was in here, you're going to consider TP2, and then if it was on 6.8, mostly TP3. Okay, so any questions? Any question so far? Okay, it seems like so far we don't have questions. No questions from you? No questions. Okay. So far we don't have questions. Whoever is that, please respect. Thank you. Hey, whoever just joined me, please respect us. Okay, guys, whoever just joined us, please can you respect us? Yeah, people. Anyway, it's fine, guys. So if you've got any questions, please feel free to text us. So with our broker, normally, unfortunately, they don't give you the chance back there. So what you can do, I can refer you to go and check with TradingView. Just hold on, let me show you how TradingView looks like. I'm going to show you how TradingView looks like. Okay, just hold on with beat. It's fine. I'll show you guys later on. It's fine. The PC that I'm using is not mine, by the way. Sorry. So anyway, it's fine. But now, if you want more like with our way of trading, you really need that more data from 1970 something so that you can trace everything that the market was doing before. Okay, but anyway, so we're here. So since we say that, remember last week I was teaching you how to get your wave 3 target using the expansion tool. If you still remember we have the fib expansion and the fib retracement. So we said you place from the what? From the lowest to the highest point. And then this one, you place it on what? Exactly on the retracement level. There we go. So, okay, in this case, so this guy is saying that we were supposed to hit that area for our take profit what? take profit 3. But remember now, this is our swing area. This is the area whereby you see, even if we place with our 2 like this. Okay, this one's coming for take profit 2. The reason why it's coming here is the area for 61.8%, this one. So it's an inverse for that. Remember, I said to you, whenever the market comes in a deeper zone, it goes to these targets coming down. You get what I'm saying? So our take profit 3, it's actually absolutely correct right now. So now automatically we have a big 3. So remember with Elliott wave, it's all about what? It's all about it's all about the impulsive and corrective waves, right? So far so good. We are assuming that this is our 3, right? But with me, I won't quickly rush to label this as 3. I will check again, because now I know that my wave 3 is what? It's an impulsive wave, meaning to say that whatever the market is going to do, it's just to give me an impulsive, right? So now we can see, we can observe that, okay, there's an impulse here, and then there's a correction there. So that correction also, it's almost similar to the bigger one. So this is my wave 1, wave 2. And then for my wave 3, I can automatically see that it was being extended to that point. Can you see that? So this 3 was extended, and then now it's correcting for what? For 4. Can you see that? So from there, after a correction for 4, can I say this was an impulse? No. So automatically, I cancel out that count. Reason why? Because this can be my 4, but now this is no longer my what? My impulse. So now we can say that my wave 3 was extended from this point to that point here. So I always teach you guys that when you want to check waves, impulsive waves, you check them with the what? With the RSI. Whenever RSI it hits the highest point, it's what? It's also confirms wave 3 and wave 5. So in this scenario, I'm going to label this small time frame so that you can see what I'm talking about. So we are getting this inside wave 1, wave 2, wave 3, right? Like this. I'm going to use a white color. So my white color, it represents the inside part. And also let me reduce to 8 my text. So we are getting something like this. And then we get our wave 2 there. So you have to speculate, guys. You have to use everything. So with my student, I always tell them that it's called a constitution for Elliott waves. So if you have to refer to the book, like they have to respect each and every movement. So you have to refer to the book, back to the book, and then the book will tell you that are you doing the right thing or the wrong thing? Because it's the constitution, it's like the lawyers or whatsoever the court. They don't just rule or judge you with anything from whatever, but they use the constitution. So now we get our constitution say that wave 3 is an impulsive wave, and it also what includes 5 waves in it. So if we were to measure from that point to that point, that's a correction of 78.6. Then my wave 3, there we go. And then that was a correction for 4 and then 5. So how do I get these points? I get them using my RSI. Can you see that my RSI is confirming this small 3 and also it's confirming this 5. So at that point now, I get what I call divergence. So it's so simple, guys, to use this strategy. You just have to use the constitution. I'm repeating again. So you can see that, okay, from there to there. So at some point, sometimes I use the MACD, but I'm no longer using the MACD. It's all the same thing. So you can see from that point to that point, price is going up. From this point to that point, price is going down. Then that brings you a divergence to that kind of a sell. So from there, I confirm now I've got my 1, 2, 3 now. So now I'm trading 4. So now I'm going to consider what the level for 4. That's the one that I'm going to work with because I'm using the bigger time frame right now. So what I'm going to do, I'm going to take this level because now this is my TP3, and I know with my constitution it also says that my TP3, my TP5. It is very possible for it to come back to what? To hit the high of TP1, of TP3 to form what we call a truncated wave. So I'm going to target this area as my first target. So this is how we're going to do it. Remember, we're still on the monthly, we're still analyzing, we don't have a signal yet. So I was saying that we are going to estimate the probability of this market coming back into this area. And also we saw that the market, it came in the neutral zone, and with the constitution, it also names that the neutral zone can either act as wave 2 or what? Or wave 4. So in this scenario, it's acting as our wave 4. This is what I saw. So this is where we are right now. All right. And then I remove this. So now I'm working with this structure. So can you see now with my structure, I have an ABC correction, this one to give me bigger A, right? So this one is going to give me this A there. So can you see this market is actually moving in a correction? It's not an impulsive wave. So I got this A. I usually like using A. I don't like these big letters. And then I've got another A, B, C for my what? For my B. And I've got another correction. And that correction, it's almost like an impulsive correction, but it's a zigzag for what? For my C. Okay, so now what am I saying? We are now in wave 4, and wave 4 is also guided with a constitution. So we are going to use the properties of wave 4. So what do we expect in wave 4? We expect a lot of things in wave 4. We expect either a triangle, we expect either a zigzag or a flat. But in this scenario, if you were to check this correction, we can't say that number one, if you, you have to eliminate now to check which type of correction is occurring. So if you were to say a flat, there are some reasons or there are some properties which forms a flat. So in this case, because we've got 1, 2, 3, okay, 1, 2, 3, okay, and a 5. Oh, okay. So then a flat can come in because a flat is formed with a 3 through 5 correction. And the fifth one, it can either be what? An impulsive leg or a zigzag. So those are the things that we have learned. Okay, so I'm saying now, what am I working with? I'm working with a what? With a flat and what? And a possible triangle. So that those are the only two that I'm working with. So meaning to say we have eliminated what? We've eliminated a zigzag on its own. So what are we saying? We are saying that, let me just quickly label this. Okay, so with this ABC to give you these structures. So lads, yeah, this is what we call price action. And I'm telling you, even if you have to use harmonic patterns, they'll also give you the same structures that we're showing you. I'll show you now. So anyway, so we are here on our monthlies. This is what we are seeing on monthly. This is not yet a signal, ladies and gentlemen. So what you do, you go to the lower time frame now. So now you know what you're dealing with and where you're coming from. So if you have to check in each and every correction, the market was here, we want some breakout. So it is this was what in a triangular, it's a triangle. So you got A, you got your B, C, sorry, you've got your A, B, C, and then this is your C, and then you've got your D because it's A, B, C, D, and then your E, your triangle is done. And then from there, you go to what, another correction, which it goes down there, and then the market break it. You guys will call it a flag or something. And then the market broke out to fulfill that structure. And then they came in with this. So now we are now working from here. So we are now working from here. So this leg on its own, it's fine. Because this leg to me, it's a what do you call? It's a 1, 2, and a 3 right there. So it's a flat on its own because it formed a zigzag there. So to this point, it's fine. And then you go to 1, 2, 3. So what are you considering? Now you want from that point to there. This leg, this leg, that's the one that you are now dealing with, this one. So if you are to remember, is it last year when we gave this buy around this area, and then our take profit, actually we are coming in this area. That's our swing take profit. That was last year. Okay. So, okay. So now this is what you're dealing with. So let me also label this one so that you guys won't get confused, or this guy, what is he doing actually? So it's something like this. So we've got two structures. So in these two structures, ladies and gentlemen, remember, we are coming from what? We are coming from is it our B or C? It's a B. This forms B to us, right? And then after forming that B, we've got this C. So now we are saying, how was our C formed? So our C, it was also formed in what? In a zigzag, right? Can you see that? So we've got this is our W. And then we've got that one is our X. So we are to say that this is another level that we're going to consider before we break above to that level. Because the market, it respects its, what do you call, it's in every, what do you call, demand or support zone. Demand or supply. So we call those, you guys will call them, what is it, support and resistance, right? Yeah, that's the name that you call it. So whenever it gets there, there's always a hiccup in the market. There is always a hiccup in the market. So you must expect it. So now you get your Y, and then this formation, it gives you what? That's the formation which formed this C. Can you see that? So this is what we saw on our what? On our weekly time frame. So now we are saying that we are either doing two things here. Either we are done with what? With our leg 4 correction, remember, or else we are doing leg D. So if we are to do leg D, we are saying that the market is going to say D. Let me see something. So we are saying that the market is going to say, I'm going to show you now. So we are saying the market is going to say, sorry, it's supposed to be, yeah. We are saying the market is going to say D from that point. And then also there's a possibility for them to come forward for E, something like this. But can you see, this is a weekly time frame, which means it might take maybe almost 2 years to 3 years, this thing to happen. Okay, it will depend with the volatility of the market. But anyway, that's what we have in mind. So hence I'm saying to you, before we go any further, we go step by step. So our first step is there, and then our second step is there. On this time frame, guys, this is not yet a signal. We are still analyzing. So that is whatever that you must keep in your mind, for that it's not yet a signal. We are still breaking down this market, right? Thank you. So, okay, so let's go down to daily. So now, since we saw that we're coming from this, so here, what happened here, check, guys, we had a breakout, right? And then in that breakout, we had a retest. So what do we do now? We use our L12 structure again. We say, okay, from that point to that point, okay? So what happened? So as you can see, this movement, it's in an impulsive move, right? Okay, but after here, this point, because somewhere it's 1, 2, 3, 4, sorry, it's 1, 2, and then 1, 2, 3, 4, 5, 3, and then 4, and then 5 here. Can you see this one? So this one is going up, this one is coming down. Remember what I told you? And then we have a divergence. So let's label it in a smaller time frame. So we are having our 1. So we are not just saying 1 because we want to say 1. There is a reason why you always say this is 1, like I told you, because now we can see this is moving in a respective manner. So this one and this one and this one, and then this one, this one, this. So they are moving in a respective manner until to that point. So from there, we can see also a retracement here, right, of our first leg. So the reason why we used our fib we are to check the level, and then to what? To comply with our constitution of this. So our constitution, it says whenever the market comes in that area, it's what? It's a test for what? For a wave 2. So this is the zone for wave 2. And then actually the market came in the zone for wave 2. Can you see? Right. So now we have our first leg for A, and then we have our leg for B. And then if you have to check this type of correction, it's also obvious. It's a what? It's a flare. So the other thing that you must keep in mind is that market, they always do what we call similarities. History repeats itself in the market. So if you have to check mostly in our wave 2 corrections, what are we getting? We're getting flats. So either way, on the smaller time frames, you must also expect the same, because history, it's repeating itself. Okay. Okay, let me use this level. So we adjust as we come down, right? Because whatever that we see on a monthly time frame, on a higher time frame, on a lower time frame, it can be a candlestick. So let's adjust to this level. Okay, so it's fine. So now we saw that, okay, so these guys, they formed an ABC correction, right? Okay, and then from there, what did they do? they also formed another ABC, right? And then now they came again here. So what did they do? So we are observing that in this time frame, we are having a structure like this. So we are having a structure like this one. Okay, so what are we saying, Mr. Trump? We are saying that, so in this scenario, this is our A leg, or this can be your W, because this is a wave 2, right? So this can be your W, and then this can be your X, and then that one can be your what? Your Y. Okay, so what are we saying? We are saying that so far so good, we are having something like this. And remember back in your mind that in wave 2, we will never ever, no matter which year, we will never ever get a what? A triangle. So there is no way where you can say that there's a triangle in what? In wave 2. It's either they can form what you call a complex correlation, meaning to say it can be a combination of a zigzag and a flat. So far so good. Our projection is saying that there's a possibility that we are going to get this, right? And then our first target is this area, and then to that area as we go up, as we proceed with this market. So this is where we are right now on daily. Okay, so we go to the lowest time frame. So we say from this one to that one. Okay. So any questions so far? Any questions? Okay, so if you don't have questions, thank you very much for following up with us. So also with our X, as you can see, this is our X was formed, and also our exit was formed in that way, ABC. Okay, and then also we have got our correction. So now we are saying that there is a possibility that now we are what? We are done, right? We are done with this because we're on Y. So we go now on H4. So now we are now considering this part now. So also, I want you to recognize something as we go down. Can you see that from that point to that point, we had a breakout there, right? So let's use a solid line. So now from this point to that point, now we have a breakout here. Okay. So what are we saying? Okay. So we've seen that. Then what are we going to do from here? And also here, we have a truncated wave. In other words, we have what? We have a divergence here. The market here, it's flat, but now on the RSI, it's going up. So can you see that? Something like this. So this is our divergence. Yes? Okay, so we have got what we call a confluence. We have got two or three things confirming one same strategy. So we get our confluence. So there we go. So now from there we got our Y, and then we got our possible of 2. So what are we saying? We are saying that if this market is gonna continue with what? With this correction, or else it's gonna go up, we are expecting a breakout and a retest. So we are going to measure from this point to that point. This is the first point of what? Of correction, right? And then if you are to check now the levels that we're looking at, number 1 in this zone, and number 2 here. So we're looking at this area. This is our maximum corrective area that we're expecting. If this market is going to correct right now, they're going to fall in this zone. So from that zone now, we are expecting to buy. So this is what you call a breakout and a retest. So you call it a breakout and retest in this area. So we're still expecting one more push down, and then we go. So if we push down in this scenario, what is your target if you are to trade here? So remember now we are on a what? On an H4 time frame. So your next target, it will be So your next target, it will be this area. Remember, first, before you go any further, your target in this zone. So meaning to say that, can you see that we are not saying that we're going to get a breakout yet, but our targeted zone is here first, when the market is going to come and retest these areas. Yeah, so I think I did everything that I was supposed to do, and it's now a matter of waiting. So we wait on H1. As you can see that there's a potential of what? Of one more leg down here. And then we're going to push one more down and then we go up. So any further questions? Those who've got questions, the floor is open. Any questions, guys? Okay, we're left with 8 minutes and we're done with our analysis. So what are you saying, Mr. Trump? We were saying that we are waiting for this more push. So at the same time, remember, we call this A equals to what? A equals to C. So we're expecting this A equals to C leg. Can you see it's coming in that area? So this is the worst spot that we're expecting to buy. But other than that, your buy can just come after. Let me just show you something since we're looking for entries. Your buy can either come after breakout of this one, of this channel. This a bit of a downtrend channel. So your buy can come just after this. But to me, there is a potential for one more push down and then we go up. So I'm still expecting them to push a bit, then we go up, because this is not a buying structure. You can see it's still what, a correction. So it's still more of what, of a selling structure before we go up. So guys, this is how we break down this market. So I hope you got something from everything that we did, and I hope it's gonna help you to analyze and be profitable in the near future. And we wish everyone the best in trading. So from there, we just quickly go back to our dollar index. So remember, with our dollar index, what we said that if these guys, they are going to break above this area, we are going to buy, right? So last week we saw that the market, it was pushed because of the FOMC and all those things, right? And then okay, on weekly it seemed like they broke out, but as you can see now in this week, they are falling very deep, right? It's falling down. So meaning to say dollar is a bit weak, but now that doesn't mean to us that dollar is going to be weak yet. So what are we going to do? We're just going to wait. So the next thing that we're going to do tomorrow, we're going to do an update on the dollar index. So if you are going to join us tomorrow, you can just analyze it today and then join us tomorrow when we're going to wrap it up. Then you can see if it's gonna add something into your analysis and into your trading journal. But we really thank you for joining today. Have a lovely session. See you tomorrow. Bye. Thank you.